Hi guys, welcome back. Another quick update for you on AMC. A lot of you are asking me, is AMC or the lenders diluting right now? In particular, we're talking about this $464 million conversion of exchangeable notes into equity. And I want to run through those details with you and give you my best explanation of what is going on exactly with these notes and what is likely to happen in the future. If you got a minute, let's get into it. I do always encourage you guys to read the filings yourself. That is the real do your own DD. But for those of you that are lazy, I'm going to do my best to explain to you exactly what is going on here. If you want to read the filings, you're going to want to open up this July 22nd, 424B7, because that is where the details about the conversion / dilution can be found. All right, let's see if I can break this down as simply as possible. On Monday, the 22nd, AMC issued $414 million worth of notes for the 6/8 PIK toggle. There is an option for the company to issue another $50 million of notes. That's how we get the $464 million. These are convertible notes at a certain price, convertible into shares, approximately 92 million shares. Now, with a PIK toggle note, what that means is the company can pay the interest in cash, or if they were, for whatever reason, short on cash in a quarter, they could do a payment in kind and pay in shares. And that's where you see at the bottom here, this other 36 million shares. If you add up 92 million and 36 million, you get a maximum on this prospectus of 128 million shares. But for our purposes, we're going to just assume that it's going to be about 92 million shares of potential dilution if that conversion of these notes happens. In my recollection, AMC has not done payment in kind on any of its notes, so I'm not really worried about the 36 million, but you should be aware of the potential dilution of 92 million shares. To answer the question flying all over the place today, is somebody actively diluting and that's what's pushing the price down? I don't think so, and I want to explain to you why. If we look in this prospectus, we have a assumed conversion rate, AMC is telling us, of 176 shares of stock for each $1,000 in principal amount on each exchangeable note. If we then take from this document the $1,000 and divide it by the conversion rate listed in the document and highlighted here on the Bloomberg terminal in the green box, we get the conversion price per share in the red box of basically $5.66. Now, I'm not a lender. I don't talk to any lenders. I don't know what is in their head, but they just spent $414 million on these bonds with an effective conversion price of $5.66 to break even. It doesn't make any sense to me that they would be converting them and selling them into the open market today, driving the price down to $4.50 and losing money. So the way that I am looking at this, and you're free to have your own opinion, of course, the way that I'm looking at this is they are going to be looking at converting when the price runs up over $5.66, depending on what profit margin they want to make above that conversion price. Every lender is going to have a different price at which they're willing to sell. But I think, in my opinion, once the price starts moving up, later this year, hopefully, as the box office gets better and AMC's numbers get better, as the price starts moving up and then it becomes economically profitable to convert the note into shares because you can immediately flip them and sell them for a profit, that is when I think they would be most likely to sell. So no, I don't think they are selling right now. No, I don't think that they are driving the price down, but I do think that at some point in the future, that will happen, and it will provide a temporary ceiling on the price until we churn through all of that dilution, all of that conversion, and them getting rid of those shares, selling them into the open market. To be clear, I think that as the price moves up to $6 or any number over that, you should then be asking the question, are these lenders converting, selling, and diluting the float. On the downside for common stockholders, yes, the potential for more dilution exists. However, if you are one of those investors in it for the long term, that means a significant reduction of debt off of the balance sheet. That is how I am looking at it. Anyways, let me know down in the comments if you think something differently, if you read something different in the documents that maybe I didn't see. In our next video, I'm going to go over with you guys the preliminary Q2 results and why AMC announced them early in pre-market today. I am Tony Denaro. Thank you for watching, and I will see you on the next video.